Hey everybody, Preston Brent here. Welcome to another weekly roundup. This is for the trading week ending December 20th, 2019, as we round out the decade. Oh, what a year it is. This fourth quarter, it certainly capped off really a phenomenal year for the stock market. I mean, all three of the major U.S. stock indexes, the S&P, Dow, Nasdaq, have set new 52-week highs. It seems like almost every week we're putting out new 52-week highs and or all-time highs. The Russell is making new 2019 highs and is playing catch up as fast as it can. In fact, we haven't completed December yet, but just the month of November turned out to be the strongest month of the year for the markets this year in 2019. We saw, I think, in the S&P 500, 13 new 52-week highs just during the month alone. All right, and this trend for the S&Ps continued into December. Just making all new highs here. Year to date, the S&P's up, around 28%. I suspect we're going to finish strong as we go through the end of the year. One of the reasons we've got a PE multiple that's expanded, earnings growth has been non-existent for 2019. So most of this growth has come with PE multiple expansion. Now, what does that mean? Basically, what that means is when interest rates stay low for a long period of time, it tends to expand the valuation of PE multiples, meaning money has no place else to go. So for yield-hungry investors, we end up chasing stocks, primarily stocks with high dividend yields, but that also tends to boost the S&P 500 as well. So we're seeing a lot of that as we're moving forward. Now, for our members in our group, we're going to kick off 2020. I'm going to do a 2020 review on which assets, which asset classes, which sectors or industries look to fare the best in 2020, where we should be looking at bets for the next year, probabilities and odds, and how we can play them. I've already laid out a few, some here for you in our free weekly roundup each week. But for our members, we're going a lot more detail. We're currently running a number of trades this year. We've had a really good year. I think 2020 is going to be even better. It's going to offer up some surprises. I think as we get through Q1 going into Q2, we're going to see probably a little bit of a drift lower. We're going to see some volatility expansion, but that's going to offer up a lot of opportunities for us. Okay. So now if you look at the chart here, what I've got on the screen, in this particular case, I've got the SPX, the cash index, and look at all these gaps higher, right? I mean, we've just been gapping higher big time. All these gaps, and that just means each of these gaps, money's flowing in. I know a lot of you have heard, well, we always fill the gap. But with the money flowing in as we rush through the end of this year, the end of this decade, it's going to be very hard for money to be selling. In fact, any dip in the markets. And this really kicks off December. This little line right here kicks off the month of December when we first started. I mean, we've had 4 gaps up, one for almost every week, just really quick. And there's been almost no pullback in the month of December or a dip. Most of our slowdown has been a sideways action. So it's just been rip roaring higher. If we look at our MACD, there is zero, what we call a bed or bearish divergence in the trade. So that just tells me that money is flowing in big time. Okay. Now next week is going to be a holiday week. It's going to be Christmas week. And then we roll into the following week with New Year's. So a lot of people are off. A lot of big money traders are off. Junior traders are manning the desk, and they're not going to be taking big positions. They're going to be settling up positions for the end of the year, the end of the decade. So I don't expect too much here in the way of craziness, although the end of the year tends to be more of an upward bias. Okay, so we can see that. I mean, if I step it out just a little bit here, you can see here on this chart, look at the vector here. If we look at the vector, let me just widen it out, of the 200 EMA and the 50 EMA. There's the 200 EMA. Here's the 50 EMA. You can see both vectors are solidly up higher. Okay. So this tells me that we're just going to really run up solid. Now, I do expect a little bit of a pullback to this trend line right here. that may, I don't know if we're going to see that before the end of this year because we've just got so much momentum in the markets. Money is chasing it. They don't want to be caught flat-footed as we end up the year. Now, I've been having our members go long since the beginning of October. All right, we had a nice signal. If I were to step it out, you can see right in this area here. Um, Once we had this brief September dip in market action, and then we moved above a value area here, and then we got a nice signal here above this trend line here. I was suggesting to our members, we've got to go long, we got to play it. We could have a pretty good run in it in the year. Now, at this point in time, guys, we were down around 3,000. And I don't know, for those of you that are following me on our weekly roundup here, I was saying that we could run up to about 3250. Now, 3250 is sitting right about that level right there. Today, we hit 3225.65. So we're getting pretty darn close. Once we get up in this area here, I think we're going to run sideways, probably come back and do a little bit of a retest, a little bit of a resting period here, okay? But net, I see things as bullish. There's going to be some surprises for 2020. Members, I will go through some of these with you as we kick off the new year in early January. But this is kind of what I'm seeing, guys. It's looking very strong. I mean, I don't see any weakness here. I've been telling folks this is clearly a buy any dip kind of moment, okay, as the markets move higher. Now, one other chart I want to show you here. Let's take a look at the Russell futures, okay? Now, I was telling folks, and I think I'd even put it out here as well, that you want to take a look at TNA, Tango November Apple, because when the Russell starts moving higher, it's going to move really quick. So if I put it on a weekly chart, let's just back it out. You're going to see this was the resistance zone that I had, and as you guys know, typically December and January is very seasonally strong for the rut. Okay. So I said, we break that area there or this area here. And at the time, I didn't know what we would break because we were inside this here. But every time we were down in this area here, as soon as we held and was moving up, I was suggesting longs in either IWM or better yet, if you want to take a little bit more risk, a little bit more beta, going with TNA, Tango November Apple. Very strong. And I said, for those that are more conservative, wait for a break up here. I said, I favor an upside break versus a downside break. Once we got that break, I said the odds favor a run up to the all-time highs that we haven't seen since early September 2018, over a year ago. And from a stat perspective, anytime the Russell has taken over a year to make new all-time highs, the following 12-month period, the rut generally finishes up around 12%. Okay, so that's just a stat that you might want to kind of keep in mind. And we're also in a very strong period of time seasonally for the Russell, stronger than the Dow, Nasdaq, or the S&P 500. So this is why I was suggesting this, but it was back here, actually all the way back in about the second week in October. You would have some really good strong movement here, all right, on this trade. So this was just one of the ones that I was pointing out to you. Now, because next week's going to be a holiday week for our members, we will have a weekly market watch this Sunday evening. Of course, Wednesday's Christmas Day, so we're not going to be doing any pre-market work there. We'll be in and out of the chat room, and then next weekend I will publish a weekly roundup for all of you folks, including our free members that view us on YouTube and on my blog. And then we'll continue with our weekly market watch for the following Sunday as well for our members. So that's kind of a brief of where we are with the holidays. Although my weekly roundup for this weekend and next weekend will be a little bit brief just because I'm in the process of traveling and moving around a bit, okay? If we look at volatility, I mean, volatility closed out this week at 12.51, okay? We're still down in zone one, solidly in constant zone one, okay? Which suggests that you want to be long gamma and long delta. There are a number of strategies that you can do that. One of our favorite strategies here, and it'll pay for our membership in a heartbeat, is just running the way we run our flies, okay? We have what we call the foo bar fly, we have what we call the baby fly, and we have what we call the super fly. Each one of them has different characteristics to it. And then I'm coming out with a super foo bar, which I'm going to call the Christmas tree, which is also going to be really interesting as well for those of you that have portfolio margin. And it plays very nicely in this kind of environment. Now we're down in zone 1 in volatility, which means it's very, very low. Okay. The odds favor, if volatility were to move, they favor it moving higher, not lower. Although with low volume going into the end of the year, I think we're going to kind of grind our way around here, short of any outstanding Trump tweet or anything that could move the markets. That's kind of what I would have as expectation. All right. And the skews and vol are still in a huge contango environment, so that's a good thing as well. If we look at the bond market, okay, bonds are still, let me put it back on a weekly, still in the directional bias that I've been talking about, which is in a down mode, right? You can see here every time we get in the upper quartile of the regression channel, I suggest shorting bonds. Now we got short here, TLT, back in early August, and for our members that took that, it's been a really great trade all the way down. Same thing with the bond market. Okay, you can see the bond market is really moving lower here, and we're well below the 50 EMA on this thing, and we're just continuing to drift down. I think we'll drift down into this consolidation zone here, and then kind of move back up to this regression channel. But until or unless we break out, then the odds favor a drift higher in interest rates for the 10-year and the 30-year. Remember, the 10-year will probably drift up a little bit faster than the 30-year, only because the 30-year, unless the news for inflation changes, then we'll see the 30-year start to fall down even more rapidly, which drives up interest rates. And speaking of interest rates, let's take a look at the 10-year. 10-year finished the day and the week up 1.91%. So we're still in this long, slow grind higher with interest rates until we get up over the 2.25 in the 10-year. I'm not too concerned about it. But once it starts getting over 2.25 or 2.50 interest on the 10-year, it's going to then start competing for money with the equity markets, and that's going to put a little bit of a lid on the PE expansion. Although 2020 is forecast to be much stronger growth because the baseline for growth is 2019, which has been really flat. So that's kind of what we're looking at in the treasury market. And of course, with currencies, we got a number of things going on. Members, I will go through some of that in detail with you Sunday evening. There's some great trades out there. We've already put one on, at least a lot of you, front run one of my trades, and you're doing well in it. And if we come down here and we look at precious metals, let's look at gold. Gold is still in my channel moving down. Now it's trying to break out, which means we're going to be in this consolidation mode here. I don't see gold going too much lower than this, okay? And then I think gold's going to make a run, but we're not ready yet. Gold and silver. If we also look at silver, we played silver to the long side way back here in the summer months. We had a great run, and now it's just running in this regression channel to the downside here. But I do believe that this is going to be an opportunity for us as well sometime in 2020, just not right now, okay? Look at palladium, down 78 points, huge move lower. I want to see this thing. Now, we came down to a key support point right here, okay, and then it bounced. I'd like to see it roll up. Ideally, I'd like to see a higher high and then a roll over again. If we can do that, I'm in it. Our last short in palladium, we had members making over $23,000 to $28,000 per contract within a 5-day period. Why? Because palladium does things like this. It'll fall 78 points in one day, and it's $100 a point. So that's $7,800 in one day. Okay. It's moved from 1974 to close at 1822. So if you take 1974 minus 1822, you're looking at $15,200 per contract in less than 4 days, just on this move right here. The reason why it moves so fast is there's no options in palladium, believe it or not. So when money plays palladium, they can't hedge a long play with puts or a short play with calls. So what they've got to do is, you'll see, except for the big sovereign wealth funds and the big money, most traders are apt to get in and out relatively quick. So I would expect some consolidation here and then another attempt at a higher move. If that fails, we're going to be looking at for some nice opportunities. There's some other things in metals going on that for members I'll talk to you about this Sunday evening. Should be really interesting play. I've already recommended some ETFs that'll track some of that stuff. Some of you have already made 45% in it, and then we'll just kind of see how this thing plays itself out. If we look at oil, oil is hitting my level where I said it's going to have a hard time moving much up above. We're in this regression channel here. We're now inside this wider resistance zone. I don't see oil going too much higher in this, but we'll see. I still believe we're still in a buy the dip mode. Okay. Remember oil, when we were down at this low level down here in early November or October rather, the markets were more about the global growth story changing over, and oil kind of played on that round here. All right. And now we're back up at this level here. So if the global growth story continues into 2020 and we see Europe, Japan, and some of these other emerging markets do better, then I think you're going to see oil move up a little bit, but there's going to be a cap on just where it's going to go. Okay. Nat gas, I'd love to see it go a little bit lower. We'll play it long like we did over here, but not at this level right here. We're sitting almost right at a value area. So in these value areas, it's 50-50 which way nat gas wants to go. So we're going to just sit on the sidelines and wait for it. There's some opportunities in agriculture I talked about, as well as in some of the meats and softs. Sunday evening, members, I'll go through a little bit more detail with you on that. Otherwise, for those of you that are on the roads this weekend, be careful. And then I guess the next time I'll be speaking with you, if you're a non-member, is after our Christmas holidays for our weekly roundup the following weekend. If you're not a member, I highly encourage you to come in. We've had a lot of new members come in, and just over a couple of trades, they've paid for our annual membership several times over. All right, guys, have a really great weekend. Members, I will see you this Sunday evening for our weekly market watch. Take care, everybody. Ciao now.